This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com. Up-to-the-minute stock market news and in-depth analysis. Our quant rating service provides objective, independent ratings daily on over 4,300 stocks. Learn more at TheStreet.com/NBR.
Jobs jolt. Good news for Main Street is good news on Wall Street. Stocks jump on a strong employment report, putting the ball squarely in the Fed's hands.
Making a comeback, what small lenders are doing to grab new mortgage business, becoming big winners as rates rise.
And Market Monitor, our guest tonight, tells investors to go global for the best returns next year. All that and more tonight on Nightly Business Report for Friday, December 6th.
Good evening, everyone. It looks like good news for the economy is finally good news for Wall Street. Stocks rose sharply because of a super strong jobs report. American businesses added 203,000 jobs in November, much more than expected, and the nation's unemployment rate fell to 7% even. That's a 5-year low. The rally was broad-based with all 10 sectors of the S&P 500 index on the plus side. Today's gains come after 5 straight losing sessions on fears that a stronger economy would be the catalyst for the Federal Reserve to begin cutting back on its stimulus plans. But now it looks like investors and traders believe that a growing economy is good news. So here's a look at today's closing numbers. The Dow shot up almost 200 points, back above the 16,000 level. The Nasdaq jumped about 30, and the S&P rose 20 points, returning to the 1,800 mark again.
So where are all those jobs, and what do the gains mean for the economy? Hampton Pearson takes a look.
Just in time for the holidays, Tanger Outlets opened this $100 million complex with 85 high-end retailers in Prince George's County, Maryland, just outside Washington, D.C. In light of today's surprisingly strong jobs report, opening a new outlet mall doesn't look like such a big business risk after all.
One of the things that we're most proud of is the employment record. Again, from a project that in its heyday was putting 3,000 workers, construction workers, every day on the project. So again, 6,000 full and part-time jobs, and not to mention again Tanger, now almost 7,000 full and part-time jobs.
The outlet mall opening just 2 weeks ago created 1,000 jobs. Among the most excited new hires, Deja Lee, a store manager at the Harley-Davidson store.
It was amazing for my manager Vanessa to call me and let me know that I got hired, especially in an area like this in National Harbor. So it was great, and I was very ecstatic, and I was just so happy to get the job.
Nationwide, the retail sector added 22,000 jobs, part of the across-the-board employment spike that dropped the unemployment rate to 7%. Separate reports today also show consumers are starting to spend again, and consumer confidence about job prospects and income has taken its biggest jump in 5 months heading into the holiday season. So, good news about the Main Street economy is also good news on Wall Street, with some analysts reading today's rally as tantamount to the markets giving the Fed permission to taper. But they don't expect Ben Bernanke and company to be in a rush.
I think the Fed will probably take 1 more month of data to have 3 months of decent data to start really indicating that they're going to clearly taper.
The Fed's tapering hand could be strengthened if Congress comes up with a budget deal, lifting still another cloud over the economy. What happens when Congress returns next week could be crucial. For Nightly Business Report, I'm Hampton Pearson in Washington.
David Kelly says the Fed is one step closer to deciding to taper. He's chief global strategist at J.P. Morgan Funds. Hi, David. So how close is close? Besides that jobs report that Hampton was just reporting on, we got that strong GDP number yesterday, this week, strong auto sales, strong home sales, good news on manufacturing, good news on, Cyber Monday. How do you think the Fed looks at all this data, and could they taper this month?
Yeah, I think they could. I'd call it about a 50-50 shot as to whether they taper this month. Logically, they absolutely should. I mean, if the Fed's going to be consistent, you go back to last June when Ben Bernanke first talked about ending QE. He said that they would start later this year and they would end when the unemployment rate hit 7% roughly. Well, we're actually at 7% already. And in fact, if you go down the list of the things the Federal Reserve has been worried about, including unemployment being too high, problems with the federal government, problems with housing, the numbers really seem to calm those fears. So logically, the Federal Reserve ought to begin to reduce bond purchases at its meeting next week. The only question is, we thought that in September, and they were, too nervous to do it then. So will they still be too nervous to do it in December?
So what do you think's holding them back, David?
I just think that they are the personnel in the Federal Reserve right now is about as dovish as we have ever seen in 100 years of the Federal Reserve. I'm not sure what should hold them back any further, but I've called them wrong in the past. So I don't want to say that it's a sure thing. But logically, they absolutely should begin. This is the most extreme monetary policy we've had in 100 years of the Federal Reserve. And it doesn't make sense with the unemployment rate coming down and all the numbers that Susie talked about. The economy is a little too strong for the Federal Reserve to keep emergency measures in place.
David, so when the Fed does taper, bring this home to our audience. What does it mean for people's investments, their portfolios? And what does it also mean if you're a borrower for mortgage rates or in other personal loans?
Okay. Well, first of all, for the economy, it does, I think, mean that 2014 will be not a great year for the bond market, just like 2013 wasn't. We expect that long-term interest rates will go up somewhere between 50 basis points and 1%. So not that much, but they'll go up, and that hurts bond returns. For the stock market, I think the stock, I'd always pick an improving economy over monetary medicine. I think this is actually better for the stock market. So I think the stock market can continue to go up. Of course, it's gone up a lot. And then for individuals, I wouldn't worry too much. I know interest rates are going to go up, but they are at very low levels. Mortgages are still an excellent deal. So if you can afford to buy a house and you can actually get a loan, I still think this is a good time to buy.
The typical paradigm, David, has always been that as rates go higher, as interest rates rise, that's poison for stocks. Why do you think the two can coexist with both rates and stock prices rising?
Well, Tyler, actually, it depends on where the rates are when you start. We've looked at data over the last 50 years, and what we found is that so long as 10-year Treasury rates are below 5%, when they go up, that's really a sign the economy is improving, and that actually helps the stock market go up. If, on the other hand, rates were, say, 8%, they go to 9%, it means you've got a raging inflation problem, and that really is a negative for the stock market. So if you start at a low level, rising rates aren't really that much of a threat to the stock market.
All right, David, thank you so much. Always a pleasure to have you on the program. Have a great weekend.
You too.
David Kelly, Chief Global Strategist at J.P. Morgan Funds.
Well, two big banks face accusations of unfair mortgage practices, and the allegations are that they produced a wave of foreclosures in minority neighborhoods. The city of Los Angeles says Wells Fargo and Citigroup engaged in what it calls a continuous pattern of predatory lending practices and redlining. That, says the city, saddled minority mortgage holders with loans they couldn't afford. Both banks called the charges baseless.
Now, while many big banks are cautious about approving mortgages right now, smaller banks and independent lenders are swooping in. And as Diana Olick explains, borrowers are paying attention.
Brian Del Terzo is about to buy a larger home for his growing family just outside Minneapolis. This is not his first foray into the mortgage process.
I've had experiences in the past with the larger lenders, dealing with home purchases, and I just didn't feel like a special person. I felt like a number.
So this time he went with Waterstone Mortgage, a smaller lender based in the Midwest.
It's been a lot smoother process with a local smaller company that seems to care more.
Brian is among a growing number of borrowers turning to non-bank lenders and to community banks. Their share of the mortgage market is now at 60% compared to just 39% in 2009, according to Inside Mortgage Finance.
I think it's a combination of independent mortgage bankers and community banks being aggressive and entrepreneurial and taking advantage of niches, and also some of the larger banks electing not to play in some of the spaces.
Banks large and small have been very busy over the last few years as record low mortgage rates fueled a refinance boom. But rates are rising again now, and refinance volume has dropped dramatically, down over 60% from a year ago. That has independent lenders gathered at an industry conference in Miami this week talking deals.
Now, that the industry is a little bit in flux, rates are up, some companies are doing well, some companies aren't doing so well. There's an opportunity for companies like mine and others like that, other independent mortgage bankers, to go out and seek market share and be aggressive in recruiting new talent, perhaps acquisitions.
As for the big banks, they may come back into the market more if home sales improve next year. But as for now, David is beating Goliath yet again. For Nightly Business Report, I'm Diana Olick in Washington.
To read more about the small lenders' comeback, head to our website, nbr.com.
And still ahead, a number of retailers are not only looking for shoppers this holiday season, but also a CEO. And that could be the biggest concern for shareholders. Another demerit for the healthcare.gov website. The federal online marketplace now concedes that during October and November, about 1 out of every 4 transactions sent incorrect information from customers to their new insurance carriers. Officials now say those numbers are preliminary, not precise, and that the error rate is now down to 1 in 10.
Don't freak out, but just 18 shopping days until Christmas. This is the height of the holiday shopping season, and some well-known retailers know exactly what they're putting on their Christmas list. Courtney Reagan explains.
Some retailers are hoping for more than just a strong holiday season. They're asking Santa for a new CEO for Christmas. It's been 6 months since Lululemon CEO Christine Day said she was retiring once a successor was found. The yoga wear retailer is still looking. This summer, JCPenney began its search to find a permanent CEO to take over for Mike Ullman, who stepped back into the C-suite to help stop the bleeding from the failed turnaround. While board members have changed, the retailer says the CEO search is ongoing. Abercrombie & Fitch may not be looking to replace CEO Mike Jeffries, though many, including shareholder Engaged Capital, think it should, even though it may be expensive for the company to cut ties with Jeffries. There isn't one magic quality that makes the perfect retail CEO. It's about matching need to skill. The trick is finding the right combination of those skills, plus a strong track record, whether it's a turnaround expert with financial acumen or a former merchandising manager with a strong understanding of a core consumer.
Some retailers may see themselves on a fast growth path, maybe looking to expand internationally, and may want to find a CEO who can prove that he or she has made that happen for other retailers in the past.
Who is on the possibility list? Andrew Jennings, outgoing CEO of struggling German department store Karstadt, is someone who's both desirable and available. Ron Frasch, Saks' former president and chief merchant, is also available, but some question whether he's CEO material. And then there's the wish list, highly desirable but unavailable. Brendan Hoffman, CEO of Bon-Ton Stores, Ken Hicks, Foot Locker CEO, Glenn Murphy, Gap CEO, and Jeff Gannett, Macy's chief merchandising officer. Michael Gould, Bloomingdale's CEO for 22 years, is stepping down in February. He says to move into education or philanthropy. It's hard to consider him working for anyone else, but if he'd be willing, he'd be a big get. There's always a chance for a Christmas miracle. For Nightly Business Report, I'm Courtney Reagan.
Well, Sears is spinning off its Land's End unit, speaking of retail, and that is where we begin tonight's market focus. The retail giant filed with the SEC to distribute stock to shareholders for the value of Land's End, but the board of directors still needs to sign off on the transaction. This is the company's latest effort to get back on track as it faces mounting losses and declining sales. Shares of Sears Holdings down nearly 4% to $48.09 today. Another retailer, JCPenney, facing an SEC inquiry into its finances. Regulators are investigating the retailer's controversial $800 million stock offering this fall. The agency has also requested information on Penny's liquidity, its cash, and equity and debt. Shares plunged almost 9% today, falling back to $8.08.
Well, JCPenney wasn't alone. Shares of Barnes & Noble also tumbled today on word that it's under investigation by the Securities and Exchange Commission. Regulators are looking into the book chain's accounting practices and an earnings restatement. The stock dropped 12% to $14.43. And Intel was the best-performing Dow stock today after a Citi analyst upped his rating to buy from neutral. The endorsement came because the analyst noted increased corporate demand for personal computers, even though the overall PC market has been declining. Intel rose more than 2% to $24.82.
And tonight's Market Monitor is betting on synchronized global growth. He says investors will get better returns from overseas markets like Europe and Japan in 2014. He's Mark Lucchini. He's Chief Investment Strategist at Janney Montgomery Scott. Mark, welcome. Good to have you with us. Let's talk first about your outlook for the U.S. markets in light of what many people expect is going to be the gradual lessening of Federal Reserve stimulus in the economy.
Well, we're expecting 2014 to be an improving year in U.S. domestic growth. What we're seeing here in the latter quarter of 2013, I think, is setting up for pretty decent inertia leading into next year. And with, I think, the loss of fiscal friction caused by the sequestered cuts in the payroll tax holiday that is going to be weaned out of the economy in 2014, coupled with an uptick in business and consumer spending, collectively, we think we can start to tease escape velocity or something around 3% GDP growth before we leave 2014.
Well, as Tyler was introducing you, he said that you're also seeing really good investment opportunities in Europe and Japan. Most people think of those areas as still a little bit shaky. Tell us just quickly why you think that's the way to go.
Sure, Susie. The story in Europe was one of not necessarily that things had to get better, they just had to stop getting worse. And we saw that earlier this year, and now, of course, Europe's posted 2 consecutive quarters of economic growth and really sports some of the cheapest valuations among developed countries. And so what we find there is terrific opportunities for picking up good quality companies, trading inexpensively, especially when compared to U.S. equities, which we think will lead to even better upside potential than staying domiciled here exclusively in the United States.
Let's get to some of your picks here, beginning with Helmerich and Payne. Nice dividend and obviously an exciting business.
Well, we think so, Tyler. I mean, the fact is we're bullish on the energy renaissance that's taking place here in the United States. It has a great portfolio of assets, a lot of rigs in the Bakken Shale and in the Gulf of Mexico, brand new state-of-the-art portfolio of assets as well, nonetheless. So what they're using is the best and most current technology available. And as you said, a handsome dividend yield trading about 12 times earnings in a nice mid-sized company, about $8 billion in market capitalization.
Your next stock pick goes along with your international theme, TAL International, that's TAL, ticker symbol. This stock has almost doubled this past year. Is there still upside? What's the attraction?
Susie, we think so. A purchased New York-based headquartered company with, again, a really attractive dividend yield around 5%, just a little bit over. Once again, trading about 12 times forward earnings. We think the business of leasing to shipping container companies is going to be good on the back of increased domestic and global trade. And needless to say, thematically, this is going to be a company we believe that's going to fit neatly into that opportunity.
Let's go to pick number 3, and I have a couple of questions. It's Japan DXJ, the Wisdom Tree Hedged Equity Fund. I assume it's an ETF. Why an ETF in Japan as opposed to trying to pick a stock over there? And what does hedged mean in this particular case?
Tyler, importantly is the word hedged. And the fact of the matter is what is done here by Wisdom Tree with regard to this ETF is that they've basically negated the currency exchange. So investors can get a pure play on the lift in Japanese equity prices as opposed to perhaps being washed out of the gains that we foresee for the Japanese equity market due to the fact that the yen may continue, which we believe it will, to weaken against the U.S. dollar on a go-forward basis.
All right. Very interesting. Thank you very much, Mark, for those choices. Do you have any disclosures with respect to these securities you just mentioned?
Our clients own all 3, and I own DXJ.
All right. Mark Lucchini's Chief Investment Strategist with Janney Montgomery Scott. Thanks.
And coming up, meet the woman who wants girls to ditch the dolls and start building. And in the process, she's building a business of her own. Our bright idea story is next. Americans are using their credit cards a lot more these days. The amount of debt on credit cards and other so-called revolving credit accounts reached its highest level in more than 3 years in the month of October. Now, that's a good sign of consumer spending leading into the holiday season.
All righty. Traditionally, construction toys for girls are a tough sell. But Debbie Sterling is trying to change that. Her bright idea, a toy called GoldiBlox. It features a book and a building kit aimed at getting girls interested in tinkering and problem solving. Last month, the company released a video that drew 8 million hits in a week, produced a ton of buzz, and a whole lot of sales.
Debbie Sterling didn't play with erector sets when she was growing up in Rhode Island. In fact, it was quite a surprise when her high school math teacher suggested she study engineering in college.
I didn't know what an engineer was. I thought it was a train driver.
She learned quickly at Stanford, though, that engineering is a field dominated by men. Sterling says only 11% of the U.S. engineering force is female, a sore spot that got her talking with a college buddy, another woman, who mentioned playing with her brother's Lincoln Logs and Legos as a kid.
And it just hit me that why were those her brother's toys? And why didn't I get those as a little girl?
So Sterling began talking to neuroscientists and reading about cognitive development.
Girls have really strong verbal skills and they love stories and characters. And what was missing from all the construction toys on the market, there was no, why are we building this roller coaster? And who's riding on it? And where are we going? And who's it helping?
The Verbal Hook is a book starring Goldie, drawn by Sterling herself. And why not? Her grandmother, Sterling Sturdivant, was one of the first woman cartoonists back in the 1950s, drawing the curmudgeonly Mr. Magoo. But toy makers weren't buying Debbie's idea. She says they were stuck in time, Mr. Magoo's time.
The message kind of over and over again was looking at me with pity, saying, oh, this girl doesn't know that construction toys for girls don't sell. Suddenly, I'm walking around like I'm in the Twilight Zone. I feel like I'm in the 1950s.
Where's the crank?
To prove them wrong, Sterling and some friends team-tested prototypes all over the San Francisco Bay Area.
We got it! You learn that they're so much more complex than what the pink aisle makes them out to be.
The pink aisle, princess dolls, makeup kits, play kitchens, and to Debbie Sterling, a target for disruption.
Hi, my name is
and her message was a hit on Kickstarter, the crowdfunding website, back in 2012, where she hoped to raise $150,000 to make 5,000 units.
And we hit the goal in 4 days.
In a month, she raised about $285,000. The first production run, 40,000 units. Toys R Us ordered, and soon in Barbie's shadow, there was a new kid on the block.
It's pretty surreal, and it gives me goosebumps to see Goldie next to Barbie, and now girls have a choice.
Goldie has had a makeover by professional artists this year, but her spirit hasn't changed.
We had Rosie the Riveter, we had Pippi Longstocking, we had Matilda, we had Punky Brewster, and Eloise. Those were sort of the 5 female characters that influenced Goldie.
Last month, GoldiBlox released this video. It was a one-week wonder until legal issues involving the music surfaced, but the bottom line is it helped sell some more GoldiBlox toys.
We shot up to #1 and #2 best-selling toys on Amazon this week.
Deborah Sterling.
That same week in Chicago, Sterling was named the Rising Star Inventor of the Year by the toy and game industry, an honor. But her focus is still on the toughest build of all, change.
Engineering doesn't have to be this incredibly intimidating math, science-y thing. We can start showing girls that engineering actually changes people's lives, and it can help make the world a better place.
Sterling says GoldiBlox is making money, though she's not ready to say just how much just yet. And GoldiBlox is also one of 4 finalists in a contest to win a free Super Bowl commercial worth somewhere close to $4 million. That announcement is due in late January. We'll fill you in when we get it. How about that?
So play with those dolls and then go become an engineer
right.
and do great things for the country.
Absolutely.
We can use more women like that. That's Nightly Business Report for tonight. I'm Susie Garrett. We want to remind you, this is the time of year your public television station seeks your support to make programs like this one possible.
And I'm Tyler Matheson. On behalf of your public TV station, thank you so much for your support. Have a great weekend, everybody. We'll see you back here on Monday.
Nightly Business Report has been brought to you in part by
TheStreet.com. Up-to-the-minute stock market news and in-depth analysis. Our quant rating service provides objective, independent ratings daily on over 4,300 stocks. Learn more at TheStreet.com/NBR.
I'm Susie Garrett with a Nightly Business Report news brief. American businesses did a lot of hiring in November. They added 203,000 jobs, much more than expected. And the nation's unemployment rate fell to 7%, a 5-year low. Stocks on Wall Street rallied on that super strong jobs report, breaking a 5-session losing streak. The Dow shot up almost 200 points, ending back above the 16,000 level. The Nasdaq jumped about 30, ending the week with a small gain. And the S&P rose 20 points, returning to the 1,800 mark once again. Americans pushed their credit card debt to a 3-year high during October, a sign of more consumer spending ahead of the holidays. And Sears filed paperwork to spin off its Land's End unit into a separate company. Be sure to tune into Nightly Business Report right here on your public television station.